Hey, what's up? I'm Russ Knopf. Let's talk some dividends. Now, I just added a brand new company that has truly global exposure. They have a really solid dividend currently of over 8%, and they are at the forefront with new products in these changing times in the tobacco industry. So let's go over who the business is, some reasons I bought them, a compilation to another tobacco giant, and I have a fantastic idea for a product for them. On with the show, getting on with the show. So we bought British American Tobacco, ticker BTI, at $36.20, which gives us a really hefty starting yield of 8.23%. Now they are an ADS, which is an American depository share. They are pegged at a 1-to-1 ratio with the shares from across the pond that trade under the ticker symbol BAT. They are in a changing industry and they recognize that. And as we always say, these companies are living, breathing entities and they seek survival as their first order of business. Just like Ultra has their moving beyond smoking, British American Tobacco has building a better tomorrow. So as we said, they do have a global presence with 15.3 billion pound revenue coming from the Americas and 10.5 billion pounds from the rest of the world. Now, recently they had been in some litigation with Altria and Philip Morris over the IQS heat not burn technology, and they did win that patent lawsuit. So they will prohibit Altria and Philip Morris from selling the heat not burn products in the United States. Little bit of a blow for Altria as they wanted to grow that here, but they're still going to have $4 billion in annual free cash flow, so Altria I think is going to be just fine. So the whole reason that I really wanted to get into companies like British American Tobacco is the consumer shift that's going on. Now I've recently come in contact with a few people that have switched from smoking to the tobacco pouches that they didn't really like because of the discoloration for the teeth, and they're always spitting and everything. So they ended up switching to nicotine pouches, which have absolutely no tobacco in them, as caffeine and nicotine are both stimulants that have some of the same similar effects. As of 2020, they currently have 13.5 million non-combustible users, and they expect that to grow to 50 million non-combustible consumers by the year 2030. They have vapor products that are battery-powered devices that heat e-liquid, which contains water, propylene glycol, and glycerol. And there is no tobacco and no combustion takes place. Then they have the THPs, the tobacco heating products, which generate a nicotine-containing aerosol. I love those nicotine-containing aerosols that have a tobacco taste that you inhale, but the tobacco is heated instead of burned, hence heat not burn technology, and it's mainly water, glycerol, nicotine, and tobacco flavors, which is dramatically different to cigarette smoke. And what I think is going to be big in smoker cessation, meaning people stop smoking, is the modern oral products such as Velo, as we see here in Berry Frost. They come in the form of nicotine pouches that are placed under the lip so that the nicotine can be absorbed by the body. Altria wants the FDA to spread the word that nicotine does not cause cancer. These are much cleaner and safer in my opinion, and I think the nicotine pouches are going to be huge in the future on top of the heat not burn technology. And I think we're going to see people really shift away from the combustible products that are very carcinogenic, as are the traditional oral products. Now we're getting into the different colors here, which, these are the same thing. This is the tobacco that everybody uses. It's disgusting. I think the product, as we can see, causes gum disease, tooth loss, mouth cancer. Not a good look, so I think these are going to eventually go away, as well as the combustible products that they have brands such as Dunhill, Kent, Lucky Strike, Pall Mall, and in the US they have Newport, Natural American Spirit, and Camel, which accounts for 66% of their combustible volume. And touching on the oral pouches, in their 2020 annual report, they showed that they increased 57% from 2019 to 2020. So I'm going to be really interested to see what the increase is from 2020 to 2021. Take a quick comparison here between British Tobacco and Altria. The price to earnings is 10.39 for BTI compared to 30.38 for Altria. So that means we're currently paying $30.38 for every $1 of Altria earnings and only $10.39 for every $1 of BTI earnings. Check the sales growth over the last 5 years. 14.49% for BTI as opposed to only 0.56 for Altria. So a lot of growth over Altria. Earnings per share growth the last 5 years, again, 3.47% to negative 2% for Altria. Now, Altria's had that Joule issues, so that's affecting some of that. The annual dividend yield, 8.2 to 7.94. So they're even clipping Altria in the dividend yield department. Now, Altria is a dividend king, do not forget. Payout ratio, we'll get to this in a second, but this is off earnings per share, and I always like to look at free cash flow, which both of these companies do have enough free cash flow to cover the dividends. We can see $293 for BTI and $348 for Altria, so they have a higher nominal dividend that's paid out. 5-year growth rate, 9.9% for Altria, and a healthy, respectable 5.3% for British American Tobacco. Look at that for BTI. They have a 7% 10-year compound annual growth rate. Net profit margin, check that out, says 24.31 for BTI and 10.73 for Altria. But out of the last annual report, they have an operating margin of 38.6%, meaning that out of every $100 coming in the door, they're keeping $38.60. Now, operating margin is the profits that are after wages are paid out and materials and production, but before interest and taxes. So still a healthy number, 38.6%. And while we're at it, check out the dividend per share, plus 2.5% growth, not world beating, but they have a high yield, and that 65% payout ratio, they have a target of 65%. Cash flow per share, check it. BTI, $4.14, trailing 12 months. Altria, $1.65. BTI has a higher enterprise value. Remember, enterprise value is what it would take to buy the entire company, meaning all the debt, everything that the company, all their assets and liabilities. So they have a bigger enterprise value. Both current ratios are under 1. That just means if they would be able to meet their short-term liabilities, everything due in a year or less, which both of them would currently not. Long-term debt, $48 billion for BTI to $27 billion for Altria. So they both have a decent amount of debt. Now, I love Altria. They are a dividend king. They have been increasing that for over 50 years. We have a big chunk of our portfolio in Altria, and we're going to keep investing in them, but do know that they are a pure play U.S. company, while British American Tobacco is global on every continent. I think almost every. I don't think they're on Antarctica. Who knows? Maybe they are. Anyway, they're a global company all over the world, which is really cool to see, and it's really good for that international exposure. And I think they have a bigger path to growth because they're accessing the entire globe. So my idea simply would be to fortify those nicotine pouches with vitamin D. You can pack them with nicotine, pack them with vitamins, bam, you get a healthy nicotine fix. British American Tobacco, you're welcome for the idea. Feel free to contact me, Russ, at dapperdividends.com, where you can cut the check and send it to. Please, questions, comments, leave them below. And if you'd like to see a little bit of a deeper dive into Altria, I did 5 dividend companies I'm buying forever. You can click that video right here, and I will talk to you there.